Welcome to my channel. Today we will be talking about the topic given. Understanding how a bank calculates the interest on your savings account is essential for maximizing your financial returns. When it comes to Tangerine Bank, the calculation method is straightforward, relying on daily compounding mechanics to determine your monthly payouts. Tangerine calculates interest on its savings accounts on a daily basis. This means that every single day, the bank looks at the closing balance in your savings account. The annual interest rate applicable to your account is divided by 365, or 366 in a leap year, to find the daily periodic rate. This daily rate is then multiplied by your end-of-day closing balance. By evaluating the balance daily, any deposits you make start earning interest immediately on the day they land in your account, and conversely, any withdrawals stop earning interest on that day. Even though the interest is calculated and accrues daily, it is paid out on a monthly basis. At the end of each month, Tangerine totals up all the daily interest amounts that have accrued over the course of that month and deposits the aggregate sum directly into your savings account. Once that monthly interest is paid out and deposited into your account, it becomes part of your principal balance. Moving into the next month, you begin earning interest on your new, higher balance, which includes the interest paid from the previous month. This creates a compounding effect, allowing your money to grow even faster over time. Whether you are earning a standard interest rate or taking advantage of a promotional rate offer, the underlying mathematical framework remains consistent. Daily calculation based on your closing balance, followed by a monthly payout directly to your account ledger. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment and subscribe to my channel. Thank you.